Okay, so yields challenging recent lows. So even got through this. Looks like, does this look familiar to you? We had a throw over here and then right back inside and a throw over here. Probably not done because, I don't think the end's done, even though I think we could see a turnaround Tuesday, maybe pop in the yen. Gold just can't seem to get going here. So, and it really should have had a better environment with lower rates. It should be doing better. Silver's outperforming. Talked about it yesterday. Looked like a bull flag. Still kind of looks like a flag. Silver looking better than gold. And uh, what do you think the S&Ps are doing? Are we going to blow to new highs? And just want to point this out. And in Nasdaq, so far, you know, it's really respecting a lot of fib levels. So we had the initial break up here, and then 88.6 rejected, held, 78.6 rejected, so far holding the 50% retracement. So we'll see if you start cutting out this 14 9 870 level should take us to a very important trend line at 14,685. Euro pound is giving back some of the gains with much greater strength in the pound today compared to euro. I still am thinking there's a chance for us to penetrate this low. This may not be such a bad turnaround Tuesday candidate. Here's your daily. So we're lower, and I still think this is potentially a bottom for a bear market rally. And yesterday, Blake was talking about Aussie. I'm sure he'll update us on it. I don't think we're back to that resistance level yet, but comparatively, it's acting pretty good the last couple days. Ryan, anything happening over on your side of the world? Why the pound's outperforming euro today?
I think we just see more moves around the current themes. You mentioned the sell-off in yields again, the drop in yields again overnight. By the way, how's my sound this morning?
It's great, really good.
Fantastic. Yeah. So we had the drop in yields. Then we had the Fed's Waller coming out saying that the Fed could taper as early as September if everything falls into plan. The old if buts and maybes. That seems to have helped put a bottom in yields for now. Whether it's going to change the trend or not, I don't think that's going to be the case. The pound's up a bit, the euro's up a bit. I think we're still following the yen. Yen crosses a higher. That again is another reflection of the bond moves, the yield moves.
Yes.
And that's playing fiddle to the majors like cable and euro dollar at the moment. It's not really anything that's happening in the pound or euro. It's been dragged around by everything else.
Did we have a central bank meeting on the Royal Bank of Australia? Did they meet yesterday?
Yeah, we had the RBA yesterday, which they sort of disappointed some. There were some expectations that perhaps they might increase QE or at least not taper like they're going to in the future by $1 billion or whatever. And one of the risks I highlighted yesterday in the room was potentially that if they look to brush over the virus cases and the issues going on there at the moment, then that could see the Aussie nudge higher. And in fact, they did that yesterday. They said, while they see the Delta variant and the cases rising, they don't expect it to materially derail the economy. And here we are tapping on 7,400 again, the big resistance level.
Yeah. Okay.
What's good morning, guys. I just wanted to jump in really quick regarding that. I'm actually surprised, Ryan, that we are not above 74 cents. And Dale, let me stop you really quick. I need to say something, and I don't like to do this to people. I don't like to be the trying to correct everybody in their language. But you said the Royal Bank of Australia. It's actually the Reserve Bank of Australia. Just
okay.
Because if you say that and an economist hears you say that, they're going to jump out of their skin. So
good.
Good. Let them.
I was like, oh, I gotta catch Dale. Friend to friend. Type of thing.
Yeah.
But no, and it's early in the morning, so I say all sorts of weird crap in the morning too. That I just get stuff spewing out of my mouth, and I have no idea what's coming out of my mouth sometimes.
That's right. So it's Reserve, not Royal.
Okay. Yeah, but it's super early. But hey, I was gonna say, it's interesting that they did not. Everybody thought that they were going to taper, or reduce their amount of taper, or stop tapering, or at least pause it for a while, or something. But they didn't, and that you would have thought that the Aussie would have squeezed above 74 cents. Well, I mean, it did, but I mean, I would have thought it really would have held. And what you've seen like every other dollar pair, kind of catch up with it, like with the sterling and the euro, and the Aussie just kind of sat there and it didn't really do anything all night. I found that kind of interesting, the price action, Ryan. But that's me again. Just getting up where you've been you've been watching the FX market since I've been sleeping. So what do you make of that?
What's the chart look like now, Blake, with your,
well, I'll pull it up, but Ryan, what do you make out of that?
Yeah, I think it's pretty much following the same theme as we're seeing in the MPES. I mean, if you look at Aussie yen, that sort of jump up, 50 odd pips, and it's kept that, and I think that's helping behind it. Again, you look at it and you think, well, maybe what banks are like. They try and make a song and dance out of every move. Westpac were one of the biggest hawkish banks on their expectations for the RBA. Yeah, and they pulled their rate hike forecast right into 2022. I think they were looking for the RBA to taper. Then they've gone back and said, they don't expect the RBA to taper, and they've got a piece out saying that the RBA surprised. Well, the only people they really surprised was themselves, and so they write a piece, making excuses for themselves why they got it wrong. But we don't see a lot of action around central bank meetings at the moment. Everyone's looking at the longer picture, the wider picture, after the end of the virus, after the vaccinations have kicked in. And that's what the RBA are doing. That's their version of the Fed looking at more jobs growth. They want to see what's coming. But obviously the market wants to jump around and have a hissy fit now over every item and saying and bit of language in the central banks issue. So I'm not surprised to see that we haven't cracked the 74 handle and meaningfully, and we're not sitting above it, because I don't see any massive change coming. They're still expecting not to raise rates till 2024, which I feel is ridiculous in the first instance, but that's me. And it is a big level. It's a big technical level. We've got it at 74. It was on the way down. As you know, I was trading it on the way down. I took a long off of it the first time we hit it down and that was on a short from the 75s. You look back on a wider chart, so you've got the daily there. You can go even wider, something like a weekly. You can see the 74 level is a big historical level, and when we get levels like this, they're not to be sniffed at. You can trade them with a high degree of confidence. And if you're wrong, if it breaks 74.20, then you probably got a proper break on the cards.
Yeah.
But in the meantime, rinse and repeat. I'm short again. I was short before, and last week, and I got stopped yesterday on the trailing balance at 73.80, which at the moment seems to be a bit of a pivotal point. I'm short again this morning. I've already got out at for some of the trade for 14 pips, and we'll see what happens. I'm keeping it nice and tight. 74.20. I'm wrong.
If you guys want to see, like, for just give you an example, this this is the Forex Flow Live. A lot of the guys that we were chatting with that have come over from Ryan's group. I had some conversations last night, with maybe it happened in our general chat room. Anyway, in our general chat room, I think Steve, one of the guys that had come over from the Ryan's group, and I can't find the conversation right now. It was last night. But he'd asked, where everybody thought the key levels of resistance were for the Aussie. And I was like, well, this 74.20 level is. I think that's really, really big. And for me, I actually was long the euro, long the pound Aussie going into the RBA. And then when it broke through this support level, I just had like a small position on, and I went to bed actually before the RBA met. It was too late for me. I got stopped out as you would expect, but because I was like, oh, they were a little bit more hawkish. Fine, I went through the support level. But what I was surprised about is when I got up this morning and we were back at that previous support. It's like for me, this is just a false breakdown now, and I'm almost like, and it's just above where I got stopped out at, because I got stopped out at like 188.14 because I had my stops below 20. It's like I almost want to get back in because this is like a false breakdown, shook all the longs out, and now we might actually reverse. I mean, this Aussie does not look like it's going to get back above 74 cents. I mean, I may be wrong, but if last night couldn't get the Aussie back above that 74.20, Ryan, then what's going to get it up there? I mean,
yeah, exactly. For all the, you can read all the comments you like in the news and the headlines or whatever. When you're looking at the charts, you've got a level. It's either going to break or it's not. And if the price action is saying that, like you say, we've had the RBA, they weren't as dovish as some expected. They sort of brushed off the virus risk. If it's not breaking on that, you've got to think, well, if it ain't going up, there's only one other way it can go. And that's when you get a bit more confident in your trade, and you think, right, well, let's have another go at shorts into 74 and see what happens.
Speaking of virus risk, we've taken out about $4 or so, two real negative days in WTI. Do you think that's one of the major factors is what's happening elsewhere with virus and demand, or was there some type of new supply news that came in? I don't see any news which would make it even more bearish, that no one could explain it.
I'm sorry, what was your question again, Dale?
WTI is peeled off a lot of dollars to the downside.
It has, and actually, I've been turning my attention this morning to hold on really quick. Where's my crude? Oh, there it is. Yeah, so we've had crude just as you're talking, Dale, it's actually moving here. And I would argue that we're bear flagging and just now starting to play out the flag pattern. Just if you want to follow this just from a technical perspective, it looks like we should trade back down below 70 again. So that's what crude looks like to me. We should trade.
No news to have driven that move yesterday, was there?
No. My opinion was, and you'd have to go back to, well, let's go really quick to where in the hell is it?
Look at all those instruments you guys cover. When do you sleep?
Don't, not much.
Yeah.
So yesterday, we had this wedge, broke out of the wedge, then back below 72.25, which if you read the analysis, 72.25 would have taken us back below the support. That would have been the sell-off. So that's what happened yesterday. We did this. I had to delete all that stuff because of writing analysis again. It got in the way of the daily charts, but as soon as it broke that support, that's what cleared out all the stops. I think it was more technical than anything.
Yeah, that's even more bearish that it wasn't news related, that people could come up with a reason. I always feel that if you don't, there isn't any real big publicity about a reason for a market to make a move. It's usually more solid than being moved by news.
Yeah. I couldn't agree more, Dale. And so this move Like it did catch a lot of people off guard. So it should be my opinion is we start breaking through yesterday's lows, and we should complete that flag pattern. Now there's some things that you should think about regarding crude. If crude oil starts to move lower, naturally I'm going to start looking at the dollar Canadian. The dollar Canadian, by the way, is brushing up against previous support that's acting as current resistance. One of the things about the dollar Canadian, which keeps me bullish, is that we couldn't even get down towards this broken trend line. We held the 618, we held some horizontal support. Now, a lot of people are probably looking at the dollar Canadian as flagging, which could be. I mean, you could say, oh, look, it's a flag. But what happens when a flag doesn't play out?
Yeah.
Then you start to get you get all these people that keep playing on the short side thinking, oh, we're going to hold here. We're going to here, let me grab my arrow. So a lot of people playing on the short side saying, oh, we're going to break down any moment now. And then eventually you just get back above previous support, current resistance. And then it starts to squeeze back higher. And with crude oil doing its thing, you're starting to see crude starting to reverse here. The risk is building that the dollar Canadian is going to break out to the upside. I think back above, back above this 125.30, is going to be bullish. Now, I want to, and there's crude. You can obviously look at the U.S. dollar, Norwegian krona, which is in my opinion very well supported. Dollar Mexican peso is just at the bottom of its range. So some of the more crude sensitive types of currencies, and believe it or not, and Ryan knows this probably better than anybody. The sterling is actually pretty sensitive to crude prices, isn't it?
Yeah, indeed. It's one of those, it jumps on the roundabout now and again on the commodity bus, if you like. And it can be a mover with Brent. The correlation is very weak and loose at times. It's often used as an excuse. But we can see it. We can see it on occasion. But one thing I'll just throw in quickly regarding the oil move. I mean, if you do it side by side with yields, they pretty much went at the same time. And as I wrote about this morning on a post, I think there's an underlying current that we're seeing in these bond moves and seeing in these lower yields, is that the stagflation risk of next year, but also to a less extent that perhaps growth won't be as strong into the new year or into the end of the year as some of the Fed heads are expecting. And when you start to talk about growth, then obviously your commodities are going to suffer alongside that, because less growth, less use of commodities. So I think there's, just my 10 cents of throwing a fundamental view at oil. If you look at, something just like a 15-minute chart, you can see that oil went the same time as yields went when they had that leg lower. Yeah. So I would loosely tie them together on the growth picture.
Awesome. And that's actually, so that's a big question that we really, and I know you mentioned a little bit when you first were chatting with Dale, this move in yields. I mean, this, in my opinion, this move is catching a lot of the market off guard. Those of us that don't even trade, the bond market, or trade, because I do trade bonds from time to time, not very actively. I probably, if I had to venture to guess, maybe once every 2 years or so, I see a bond move and I want to participate in it. But mostly I just kind of watch and observe. But personally, I have felt that yields are going to move higher, pretty much across the curve. And I've been wrong in that assumption. Yields continue to drift lower. The 10-year is back above its 200-day moving average. What do you make of that, Ryan? I mean, I know you're mentioning stagflation, but and maybe growth is not going to be possibly as strong as the market's expecting. But this persistent inflation, low growth, I mean, that is pretty much the definition of stagflation, right?
Yeah, exactly. And it is strange because I would have been expecting yields to be sitting well above 2% by now and looking higher. The economy is doing well. All right, we had some softer PMIs, but only marginally. But the economy is doing.
ISMs are drifting lower too. I mean, you're seeing growth really starting to come off. Different.
But the constant thing I'm seeing with economic data underlying is that the demand is there. The demand is there. It's just being held back by these supply issues. So you've essentially got a cauldron bubbling, and at some point it's going to blow. If all these bottlenecks and supply issues dissipate, then you're going to get a secondary blow. And as we said on prior webinars, if the jobs market suddenly kicks off in September, October, after all these job schemes finish, that's another big secondary blow behind the economy, because then you've got wages going up, you've got people now on proper earnings rather than government earnings, and they're going to start spending, and so the consumer demand is there, and all these factors will be supporting a recovery for longer. So I'm still of the mind that the bond market is maybe going too far in expecting things not to be as good as they would like, but we get that these days in markets. We call it boat rocking. Traders run from one side of the boat to the other. There's no middle ground anymore. You're either really hawkish or really bullish, or you're really bearish on an economy. There's no middle ground, but that gives us the trading opportunities, because if the wider market is wrong, well, if you're positioned the right way, you're going to make a lot of money.
If you guys, Blake, if you pull up TLT, I talked about it yesterday. I said the pattern looked incomplete, and that we had one more high left in it, and it could be try like a 4-hour chart, something like that. Okay. It's a little compressed. That's better. That we have a 3 coming at one more new high. See the last 2 highs that we had. That's 1, that's 2. We're pulling back, and we could get 3. And and then if you look at a weekly, that level is back at major resistance. So I think we're close to the end of this with one more pop. So was looking for the pop, and then I think that could be it. So I don't know the fundamentals behind it or anything. It almost smells like a whiff of deflation rather than inflation, but I think it ends after this pop up here, and then we'll see what people could do with higher yields. We know what the market's doing with lower yields. The test will be with higher yields, I believe. So
what we have to look forward for is that if this market is wrong, and I was looking at the bond positioning today, and the specs are, it's still a bit undecisive. If you look at the speculative reports, the CFTC, we've been long, we've been short, we've been flat. And we're just starting to build longs again among the spec players. The institutions and financials, they're a bit up and down. The biggest position at the moment is leverage funds. They're long bonds, just under 400,000. And if those that are long, if they're wrong, there's going to be a huge snapback, and that's you're going to see yields well above 2.5-3% pretty quickly. But I'm long dollar yen, have been since last September, on the back of the US recovery, yields going higher, and so I'm questioning the trade a lot at the moment, seeing these yields fall, because it's not going the way I want it to go.
I'm glad you brought that up. Ryan, this was my chart of the day yesterday. And by the way, I want to make sure that everybody here knows this. And this is something that we're very clear on in the Forex Analytics family, especially with our analysts. Like, Greg, I asked Greg, I'm like, what's your analysis going to be on over the weekend? He's like, bullish, precious metals, and bearish the dollar. I'm like, okay, and I didn't give him my opinion. Like, well, I'm really bullish the dollar. So, I did what, I don't influence. And you're saying, hey, you're bullish the dollar yen, or at least you've been expecting the dollar yen to go higher based on yields moving higher, but now you're questioning the trade. And I did not post this chart yesterday because of your ideas. I had actually no idea that you were so bearish the dollar yen. Maybe I missed it. It went over my head. But I want to point out that the dollar yen is sitting on pretty key support here, and it is following the yields lower. I mean, I don't know if there's much stopping it right now for the dollar yen to drop down to channel support. Anyway, sorry, I didn't want to interrupt you, but this was my chart of the day yesterday, and you're already asleep by the time I published this anyway. But yeah, so I'm sorry, continue on about the dollar yen, about your questioning it now.
Yeah, no problem. You were just breaking in and out there, so I don't know if my sound's gone a bit funny again. Let me know if it is, and I'll switch over. But yeah, I'm long. I've been long all the way down to 103.10 is my lowest entry.
Yeah.
All September last year. So, and the highest I got out, I think was 1080, 110.80, close to 111 for a slice.
Nice.
But yeah, I'm constantly assessing the position, and this move in yields is not what I want to see. So I'm constantly asking, why is that? Why is it not going the way it should be going? And yeah, I think 109 is a potential watershed level because we tried it a couple of weeks ago or last week or so, held pretty strongly. It's holding again at the moment, but the bounces are very weak. If we get below there, then we could be heading to the low 108s pretty quickly, even worse. And then I'm going to start thinking, maybe it's time I need to, shave some of my position a bit more, reduce the risk, reassess, see if it's the end of the trade, and where we go from there. Because if it continues, we could be moving down to 106s, 105s even if this continues. But I still feel at the back of my mind that the market is wrong. It's going too far in its view. So that will keep me in the trade for perhaps a bit longer, but I'll let the levels be my guide.
All right. Well, that's some good views here, Ryan. And I look at the chart, at the dollar yen, and I'm like, man, this thing is just not rallying, and it's I think it's more of a yield play. I think you're exactly right. But maybe hopefully the market is wrong, and we are going to have a lot of people coming off of we're looking for work here in the United States, and I think the next couple of months should be fairly strong jobs reports. And, obviously we're going to get our July report on Friday. So that will be, that's going to be interesting, but I think they're going to get better from here on out. And, as you pointed out, aptly, I think that the economy will be on its own footing versus on organic footing, if you will, versus government footing. So let's hope that does transpire. Dale, I'm going to let you take over here in just a second, but I want to say this, guys. First of all, if you haven't taken advantage of the Forex Analytics pricing, we haven't offered a special pricing since the beginning of the year. So since January, it's obviously, here we are 8 months down the road, and we are finally offering a discounted amount for our pricing. The reason why we're doing it is because Ryan, who you've been listening to with the Forex Flow Live team, Ryan has joined forces with Forex Analytics. We've merged and brought his traders here, and merged in our, we have trades room, news and research. We have our Spanish chat room with Leandro. We have our general chat room, which Forex Analytics subscribers already know about. And, on top of that, you have a mobile app and you have patterns in play, which, by the way, I just put in a new pattern in play this morning for the US dollar Norwegian krona an hour ago. So, there's a lot of a lot to offer for you. So take advantage of the pricing while you can. It's buy 1 month, get 1 month free, or you get a semi-annual or annual discounts, if you want to be with us longer term. We do that mostly for the people that have been around us for a long time that just want to get a discounted amount, because they're like, well, why pay month to month when I can, get a semi-annual or annual discount and pay less. So anyway, jump on the offer. We don't know how long we're going to leave it, but I think it's going to be removed probably by this weekend. And I'm just telling you guys that because that's our internal conversations that we're having. It's probably going to be gone this weekend. So take advantage of it while it's here. All right. Dale,
Yes, buddy.
and I guess you got Mr. Wyckoff here.
Yeah, in person.
Mr. Wyckoff in person.
His clone is Bruce Fraser.
I know. It's funny because I'm a Wyckoff accumulation distribution fan. So it's good to hear Mr. Fraser, and you guys have a great interview. And thanks, Ryan, for being here today.
Cheers, guys.
Okay.
Speak to you
All
tomorrow.
right. All right. Good hunting, Ryan. Good hunting, Blake. Thank you, guys. And
Thanks, guys.
And Bruce, welcome back to Face.
Hale.
It's
Good
great to
morning.
hear your voice. Great to hear your voice, Bruce. And you want to share your screen? I'm interested in what you're looking at in this in the dog days of summer here in August, and ready to run with Dale Pinker. Wow. Okay. Well, you have my where'd you get a picture of my quote machine?
Exactly. Yeah. So
where's the glass?
I just want to make the point that I'm like very old school. So
yeah. Okay.
I'm going to attempt to channel Professor Wyckoff this morning, and a little bit. So
okay. So what's ready to run? Are there markets, or I think that my running at this stage might be a little disappointing. I don't think.
Yeah, you and me both.
Olympic form.
Right.
So what's on your mind, Bruce?
Well, it's I just have this like big, like a junk drawer full of charts that I bring just for our conversations, because I never know where they're going to go. And which is fun for me. This is fun because you challenge me immensely. So anyway, I'm going to show you this this cool chart here just to get us started. This is a chart. It's very fuzzy. It's like, and it's very old. And it was done by my teaching partner, Roman Bogomazov. We taught together at Golden Gate University. And so he here's the literally the life cycle of a market. And so it's got the accumulation phase, the markup, distribution, markdown. So hopefully we'll see a little bit of that today as we go. So anyway, there's beautiful distribution and the characteristics, and also how distribution is maybe a little different than accumulation. But I thought just to start that we would start with stocks. And here is now I think this quote is pretty close to up to date, but this is the NASDAQ 100 E-mini futures.
Right.
And you can see here that this is the COVID low accumulation structure back in early 2020. And this count took us up to 15,400, 16,100. We always do a range in horizontal point and figure counting, which is what we have done here. We took from the count line and from the low, and this is an objective that we got, which is so amazing because we like to joke, because I've done a million point and figure horizontal counts. And then when I got done doing a million, I did a million more. And so we always like to joke that it's like, isn't it amazing this stuff works? And I'm going to show you in a minute why I think that this is the way to go. I know that you have a number of currency traders, and I think that this is the only way to go for trading crypto and currencies and things like that. So anyway, this is a reaccumulation which occurred in September of 2020, right over here. And this reaccumulation confirmed, we call this a stepping stone confirming count. And this confirmed this accumulation low down here, which gives us added confidence. And you can see here that from the count line of around 7,300, we've had a really great upward run. And now we are getting close to fulfilling minimum objectives we haven't done it yet. I think that there could be higher to go. And then of course, the other thing that we do is we zoom in to smaller time periods and look for evidence of, continuation or conclusion of the advance.
So
Um,
to
mhm,
complete it is up around 15.4 or so, based upon the reaccumulation, 15.8. You had a couple of numbers there.
Yeah, so here 15.4 to 16.1 is the accumulation count, 15.8 to 16.7. So keeping in mind the incredible amount of liquidity that's in the system, that's been pumped into the system, it just, this has been really an epic run. And I would think that just as a result of that we could have a continuation of the advance
Okay.
well into the higher objectives.
Why
And
do you
then we
have
could build new objectives.
15,000? Why do you have 15,044 up there?
Oh, that is just because that was a recent quote
Okay.
of where
Recent
we've
high?
been. Yeah, that's where
Okay.
we've been to here recently.
Okay.
And so I just wanted to give people a sense of, where we are in relation to the objectives that we have.
Okay.
So-
And if we don't achieve those objectives, what would negate the count? You'd have to go all the way back down under 10.8 or something like that to negate it.
So going back to my handy trusty schematic distribution is what we would be looking for. So for instance, here is, on a small scale, the accumulation, we just looked back in early 2020. And then, so we would look for reaccumulation counts that confirm up to these levels. And then here we see one here. And if we start to get climactic behavior, so the key is that you always stop, the market can do whatever it wants, but typically you stop an important advance with a buying climax in an automatic reaction. And this gives us at the top of the buying climax, this is probably the most important thing I'm going to say today, is that you draw resistance at the buying climax, you draw support at the automatic reaction low, which is a short, sharp reaction that is large and sudden and unexpected, and then you get a range bound condition. And so I think my answer would be, if we can't get up to those objectives, that we would see something akin to this, where we would have distribution forming and we would start to build a cause for lower prices.
Okay.
Yeah. And so that goes back to your and my heritage, which is this guy here, it's push comes to shove, we're always tape readers. And the way Mr. Wyckoff always focused on tape reading, where, Jesse Livermore would stand there and read the tape, and you can see it coming off right here. Here's the little tape, coming off. But Mr. Wyckoff would be analyzing vertical bar charts and point figure charts. So that's his definition of tape reading, is to read the charts, and he was quite incredibly good at it. And so we're trying to replicate his skill set and then also teach it to others. So here's an example, Dale, of the Dow. And here you can see this is a daily chart. Here's a beautiful upward trending advance. There's a very specific way that Wyckofians draw trend channels. And you can see this beautiful, we call it the upward stride of the market. And then once it's established, usually really early in the advance, we start to trade the outer edges of this as it goes. Here's an example of a climax right there. Yeah. And so there's a climax automatic reaction. Now this, I am making the case that this is a reaccumulation, which is even reaccumulations start with a stopping action, which is a buying climax, and then a range bound state, which is building a new cause for a new advance. And so that is what I'm interpreting here. because we've had this beautiful, look at this beautiful pullback to the, what we
Yeah.
would call the demand line right
Yeah.
there. That's
What's-
called a last point of support. And
Okay.
it rallied.
LPS.
That was that 900-point intraday decline in the Dow.
Okay, that was on a Monday or a few weeks
Ye-
ago. Yeah.
And it
Uh,
reversed right up, and look what it's doing. It's rallied right up to this, what we call a sign of strength, and it's hovering here, and it's not correcting back into the range bound area, which I so far am considering that to be
Constructive.
a constructive thing. Yeah.
Okay. Nice look. And
And
very good
so-
explanation of it. Oh, and here we are to your X's and O's.
And so, right, so here is an attempt at counting that reaccumulation area in the Dow, and the Dow has been where the NASDAQ 100 has been in an upward stride and really has been the place to be.
Right.
The Dow's been more in a range bound state here, but also, you know, we look at the Dow because it is psychological, and it's giving us now a count objective up to this 37,868 level, and it's attempting to jump out and consolidate up here. So this is I think, interesting and constructive. And the thing that I call this the danger zone, which is this resistance area, because when you get up to here, you could really just pause and come right back into the range, which would be not necessarily productive. We want to see it jump up and then attempt to test from above one time and then show that it's beginning its uptrend.
Does Wyckoff have any rules, since you brought up retests of breakouts, of how many times you can test a breakout? Because just from my trading experience, when it happens more than once, I begin to become skeptical about it, that the market's providing too many opportunities for people to buy a breakout.
Sure.
You know, like, okay, Dale, you missed it, but you know, you're waking up now a week later, I'll let you buy it at the breakout level. Any rules about that? Huh?
Yeah, when you complete, say in this case, reaccumulation, this is also true of accumulation. What we want to see happen is we want to see a run up to the resistance area, which is what we just saw in the Dow Industrials right up here. And we
Right.
want to see this, we want it to be brief and then continue the advance. So 1 to 2 tests of resistance from above is ideal. More than that can be a problem. And so we would be very careful about any extended stay in this area. And really the reason for this, the narrative for this, is that when you start to go up after completing absorption, reaccumulation, or accumulation, is that when you've completed absorption, then stock is in very strong hands and it's very difficult to buy for institutions.
Right.
And so they have a very difficult time getting on a full position. And so this is the reason why the market can go up like this in a really fast way. So your point about having too many tests here really is an indication that absorption's either not complete or this is maybe some kind of distribution, which would be what we see over here. And so
you could have these false breakouts after an accumulation period, and then it looks like it's breaking out and then fails, because, you know, breakout failures or breakdown failures are great trades if you're you know, nimble enough to see it as a failure, and because you have so many people wrong-footed on the position.
Well, here's your point is so good, because, you know, Wyckoff, all he did was codify good trading. And so the things that we talk about, people that are listening are going to go, oh yeah, I know that, you know, I've seen that. I just call it by a different name. And so here, in this case right here, Dale, this upthrust after distribution is exactly what you're describing. And it's a jump up and out of the resistance area, and you know
Right.
what it's designed to do. And so all of this has come after distribution is nearly complete, which is the opposite of absorption. The very large informed interests which bought stock or commodities or whatever they're trading at much lower prices have decided that this is the place that they're going to start to release their very large holdings. And so they very carefully are selling stock across this whole area. This last jump up and out is called an upthrust after distribution, which I think just basically describes what you're saying, because what happens is that they attempt to run the instrument, the stock, whatever, to new highs, which they do, and then immediately it has a test and then fails back into the structure. This is a very dangerous place because this is where distribution. So this is upthrust after distribution, which means that the stock or the instrument is now pretty much all in weak hands. And there's only one way for an instrument to go down when it's in weak hands.
Okay, so let me ask you a question. You've shown patterns of reaccumulation after an uptrend. The market moves sideways, and you've labeled that reaccumulation. This looks almost exactly like those patterns, only this time it's called a distribution pattern. Don't they look similar until you get that failure?
Well, and that's exactly why I put these together, is because you know, this is exactly.
I mean, how do you know the difference? Is and I asked that question even with the Russell recently. Is this distribution or is it accumulation? And I guess because we've had false breakouts, false breakdowns, but mainly sideways since March with everything else making new highs. What do you think it is as a Wacoffian?
Well, there is a very specific thing to look for, and it can be confusing, but there are clues about the difference. First of all, note that both of these areas start the same way, and that's with a sharp run up into a buying climax, automatic reaction, range bound condition. Now, the difference here is that there's different motives in the large, and the only ones we care about are the large operators, because they're the ones we want to follow what they're doing. We want to follow in their footsteps. And so here we see.
How about the Smooth Operators? Was a very good song.
Yes, it was.
Smooth Operator. Yeah.
And I think of you that way. Yeah. So
touche. All right.
So actually these schematics kind of illustrate your point, because notice here what happens after there's an attempt to test resistance right here in the middle of the structure is that it comes back down again, which really discourages traders. Traders go away. They don't stick around for these reaccumulations because they get supremely frustrated. But here you can see the opposite happening, which is instead of, and this is becomes a dull, long, extended decline, narrow ranges, diminishing volume on the way down, which shows evidence of absorption. The stock is becoming harder and harder to buy. So over here, you have sort of the opposite thing occurring, which here you can see it's attempting to run up into resistance. And these tend to be rallies of poor quality. And so they rally into resistance. They have poor rally characteristics, and then they get up to the resistance area, and in this case, it doesn't even get back up to the prior highs over here, and then we'll start to turn back down. And notice that when distribution is largely complete, that the decline that follows is one that has ease of movement, generally has an expanding volume, large ranges, moves easily downward. And in the case of reaccumulation, you have just the opposite. You have very big jumps, good volume, expansion up into resistance and above is really easy. And so this is another point that about yours about testing from above is
Yeah.
that if you have a stock that's really in strong hands, it won't even pause here. It won't
Yeah,
even
that-
pause. It'll just jump out and it might spend a couple days just hovering and then it's off it goes. And this is where a Wyckofian needs to really understand context, because when you get into either this, what we call a phase C, phase D part of reaccumulation or accumulation, the market's moving easily and effortlessly upward. And
Right.
all these people that have been shorting resistance for months and months and months, all of a sudden are trapped in their shorts, and they
Right.
become a big part of what creates the demand to drive higher prices.
Yes, they're part of the squeeze. So,
Yes.
okay, can you just give me what the point and figure target was on the Dow again, Bruce? Just for my taglines. You had, I think it was 15.8 to,
Oh, that was the,
Yeah.
that was the NASDAQ. Here's the Dow
oh,
in this little,
37. Okay,
that little reaccumulation.
yeah,
I just did a blog at stockcharts.com. It's called Wyckoff Power Charting. You can go there. Anybody can go there and look at these point and figure charts and that vertical chart I did of the Dow. And then this is
Okay.
the one I think that you're talking about. Is this?
oh,
This
that's
is
the NASDAQ.
NASDAQ
Yeah, I have
100
that. Right.
E-mini
Okay,
E-mini futures.
okay, I've got it now. All right,
Okay.
appreciate it.
Oh, of course.
Anything else you want to cover with us today? It's been, we're getting comments. Barry said, excellent dissection of the moments in the market. So you give real good color and descriptive about market movements. Nice job, Bruce. Okay, so
Dale, I know that I've got to be on my A game when I come on with you guys.
you're always on your A game, Bruce.
So
right.
here, this is kind of an interesting chart. I could go on and on. I've got hours of stuffs here, and I know that
Yeah.
you're going to pull the curtain here in a minute.
The hook.
The hook, yeah.
The can,
So, so this is interesting. This goes back to February, and this is the IBD 50 fund. And I like to look at this. I like to look at some of these ETFs as proxies. And
Yeah.
so I look at this. The NASDAQ 100 has been on a tear, and that really is because the mega cap growth names, those 5 or 6 super big stocks, have been
Yeah.
getting good bids, have been going up, and have been driving the index up. Here's what the typical growth momentum stock has been doing in that same time period.
Not even close.
Not even close. And look at how, so the question that I would be asking is this possibly distribution?
It looks like a descending triangle, possibly.
Yes.
Which
And
is a reversal formation.
there, and so here's your climax right
Yeah.
here.
Okay.
And then here's your automatic reaction. And then you have a range bound condition. We call this preliminary supply. This is often a really good warning because you get kind of a mini climax and a sharp reaction, which is bigger than what preceded it on the way up. And so this is a warning that there are large sellers that are willing to start to sell at a price. So
Yeah.
we're getting into the range, but it's early. And so
look at the
here's
low of the range holding the previous accumulation phase. That's really interesting. The low
Yeah.
of this recent, the area we're talking about now, the
Right here.
pullback was to what was happening in September, October, November of last year.
Right. Yes. Very good point. And
Yeah.
so this is I do think that we're in a place here. I call this a last point of support, phase C, which is the final testing phase before you get a markup. I'm wondering if we couldn't get these momentum stocks to rally up to this prior high, and maybe through it, we'll see whether there might be either the beginning of a more important uptrend, or this is in fact an upthrust after distribution. But so far, this has not been impressive. And
Yeah.
actually the Dow looks better than this.
It
And
does.
yeah, so
Okay, that's really a nice look. So the message is this would be your relative weakness, and what if we can't even break out from here?
Right, exactly. So this is just interesting because I know, are we out of time?
No, go ahead.
This is the chart that I put up. This is actually May, early May. And I just like to show this because it's a classic distribution. And so here is an attempt here, Dale, to rally, and it can't get to the prior high. And then we call this an upthrust.
Uh-huh.
Yeah, go ahead.
And what's that on the right-hand side? The market has leprosy, LPSY.
Yeah, that's called a last point of supply.
Okay.
And
All right.
it's a rally of poor quality. Look, it's right into resistance, which is the resistance is the buying climax. Very important level. And the buying climax is always important because this is the point defined by the large interest that says this is the price at which they're willing to start selling. Right. And so the last point of supply goes right up to that level. And then look what happens. Look at how poor the quality of the rally is. Well, we know what happened subsequently to Bitcoin there, but I wanted to just show everybody that distribution schematic. Now, we don't do pattern recognition per se because every one of these is different in its own special way, but it's remarkable to me how well Bitcoin works in a Wyckofian sense. So there's a really great principles at work of Wyckoff in the way, and you can do intraday point and figure on Bitcoin and so on. And then here you can see this is daily data, 3-box reversal. So this is a really big count structure with 1,000-point scaling here. Wow. And so look at this, how this, here's a reaccumulation, Dale, right here. And look where it counts to. And I think we went to 65,000.
Yeah.
And 64 maybe. And so look at how we went right into the count range. And then this is where the upthrust happened right here. And downward we go. Look at how easily we move down back into the structure. That's the kind of evidence that we look for, that distribution is in place. And so then the rally, which goes to the buying climax here, and it's a rally of poor quality. And look what it does. It just sets up the whole distribution.
And it went to your downside target that you had off the point and figure.
Yeah. Right there. Yeah. And so,
okay, well, go ahead. Bruce.
No. So anyway, I was just going to conclude by saying you have to be really careful when counting distribution that you don't overcount. And so here we've just taken this from the last point of supply to the upthrust, but I would just be cautious, not that you can't try to trade Bitcoin from the long side if you get a structure that allows for that, like here, that was ideal over here. But this is looming over the top of crypto, is this much larger structure, and that would just give me reason to be a super good risk manager. So yeah.
Well, you did it again, Bruce. I learned from you today. Like every time I talk to you, I know if I do that, our community is as well. And it's interesting when you bring up Bitcoin. What fundamentals are there to trade on Bitcoin? That it's in an adoption phase, so it's all technical, pretty much in crypto, isn't it?
It in my mind, and also I like to look at currencies from that perspective, and I do. I basically just look at the major kind of currency indexes and so on. But you can really see the pattern structures in. And if there is a second here, I do have kind of one interesting chart of right here. And so this is just now. I know that you all are really, really sophisticated currency traders, but I just want to show you this. This is 30-minute data, point and figure chart. I look at a lot of intraday. So here's a 30-minute chart, 3-box reversal, and it did a beautiful job of getting right into the area of the climax, stop the upward trend. now we have this count that comes back down to a higher low. And this is just UUP, which is my proxy. But look at
Right.
how beautiful this is a 2-hour chart, how beautiful that accumulation structure is in a 2-hour basis, and how beautiful this distribution structure is potentially on the same chart. So you
Yeah.
get
We have a
and
battle
this-
brewing mid-range here, won't we?
yeah. And then here's this beautiful cause, beautiful count. And now it appears there could be another one at work. And so this is just cool stuff. And so anyway, I leave you with that.
I love
here.
that you love what you do. It comes across, Bruce. So I know that every once in a while I'd like to check up on, what you're doing and what you're sharing. So how would viewers that are listening to us live or see the video later get more of Bruce Fraser in their trading life?
There's two primary ways. They go to stockcharts.com to articles. Wyckoff Power Charting is a blog that I write periodically, and it's free. It's not behind a paywall. And then I'm on Stock Charts TV, and I do a program called Power Charting, where I cover a lot of these different themes every week. The show airs Friday, 3 p.m. Eastern, and then it has replays, and then they put it up on YouTube. That's also not behind a paywall. And so those are two really good ways to participate in the Wyckoff materials.
Well, the financial trading community, investing community is fortunate to have a guy like you sharing Wyckoff's principles and explaining it in a clear and concise way for people to get it, Bruce. I respect your work and want to thank you, my trading warrior brother, for coming in and edifying the FACE community.
I always love to be with you and your viewers.
Thank you so much, Bruce.
Take care, everybody.
Okay, so that's a wrap, everyone. Turn around Tuesday. Good hunting. The rest of the day, remember, don't just count your distribution and accumulation patterns. Recognize your blessings and count them, and not just your pips. And we'll see everyone tomorrow. Adios. You're very welcome. Everyone's thanking you, Bruce. So great show, and we'll see everyone tomorrow. Adios. Thanks again, Bruce.
Thank you.